Hello, my name is Yutaka Watanabe, tax accountant. Welcome to the channel Tax Accountant Nabe solves your money problems. Today, I'd like to talk about amount of unreported income found in tax audits. Let me begin with a surprising question. Did you know that an enormous amount of money comparable to defense spending or public works expenditure within Japan's national budget moves every year in the back and forth between tax authorities and taxpayers? In today's explanation, we will take a deeper look at the latest data on tax that affect all of us, especially tax audits. Hidden in the data is a paradox that may appear contradictory at first glance. The total amount of unreported income is decreasing, yet enforcement by the authorities is becoming stricter than ever before. Let us talk about this structural change happening beneath the surface. 819.8 billion yen. First, please look at this number. This is the total amount of newly discovered unreported income through tax audit in fiscal year 2024. A figure of 800 billion yen is on the scale of the annual budget of a prefecture somewhere in Japan, or enough to create a massive infrastructure project. That means an enormous amount of wealth that should have been reported was hidden beneath the surface. This alone is shocking enough. However, looking only at this number does not reveal the true picture of what is happening on the ground today. What this number shows is a dramatic change from the previous fiscal year. In fiscal year 2023, the total amount of unreported income was approximately 974 billion yen. In fiscal year 2024, it fell to approximately 819.8 billion yen. In other words, in just 1 year, it decreased by about 154.3 billion yen, or 15.8%. In economic trends, a change of more than 15% in a single year is an extraordinary event. It makes one wonder whether a major recession occurred across Japan, or whether some fundamental factor was at work. When viewed in terms of total amount, this is a shocking decrease. Now, the amount of unreported income has decreased by 15.8%. How do you feel when you hear that? Did you perhaps think maybe the tax office is easing up? If you look only at the surface numbers, some may suspect that the authorities' monitoring has become less strict. But reality is not that simple. What the data shows is that targeted investigations into specific fields are, in fact, being strengthened more than ever before. For example, imagine that past tax audits were like casting a wide net into the ocean and collecting small cases of unreported income. Now, however, the authorities have put that net aside and are instead holding an ultra-advanced superfile. They are taking aim at specific massive targets and cutting deeply into them. That is why the total amount may appear lower because fewer small cases are being caught in the net. However, the impact of each shot has increased dramatically. This is the true nature of the biggest paradox shown in this report. The authorities' targets have completely shifted toward specific fields with a high degree of maliciousness. This is not about simple calculation errors or accidental omissions caused by lack of knowledge of the tax system. These are professional tax evasion schemes that are fully international and complex. For example, using multiplied dummy companies to make money flows impossible to trace, abusing the anonymity of crypto assets to hide profits, or exploiting loopholes in different countries' tax systems through complex multinational schemes against actors with advanced knowledge and malicious intent. The authorities are concentrating their limited resources and conducting thorough investigations. So, what exactly are these highly malicious specific fields? The materials point to two targets. The first is overseas transactions. As business becomes increasingly globalized, this is an area where international profit shifting can easily occur by exploiting opaque structures. The second, and the area currently receiving the most attention from the authority, is fraudulent consumption tax refunds. A typical example is the abuse of export tax exemption system. Japan's consumption tax applies to domestic consumption, so when goods are exported overseas, they are tax exempt as the consumption tax paid at the time of purchase can be refunded. Malicious operators exploit this system by creating falsified documents despite not actually exporting goods, and then attempt to fraudulently receive hundreds of millions of yen in refunds. The authorities are using data analysis and specialized teams to show a strong stance that they will absolutely not overlook such schemes. It is truly a game of cat and mouse. The more sophisticated malicious actors become, the more the authorities respond with advanced methods using AI and big data analysis. The reason this matters to us is that it protects the foundation of a fair society where honest taxpayers and companies that while properly are not disadvantaged. Those who follow the rule can operate smoothly. Meanwhile, those who try to abuse the system now face an unprecedentedly high wall strengthened by technology. That is real picture, derived from the objective data. As we have seen today, a major qualitative transformation is now taking place on the front lines of tax audit. As borderless economic zones continue to expand, methods of misconduct will also continue to evolve every day. Money frauds will become increasingly complex. Transactions involving blockchain, and metaverse spaces may become the next main battlefield. In that environment, can tax authorities continue to keep up with these ever-evolving malicious schemes? Simply have this perspective should allow you to see economic news and new legal development with much greater depth. Today, I spoke about amount of unreported income found in tax audit. For more information about tax audit, please also visit the website of Yutaka Watanabe Tax Audit, Tax Accountant Office. I will continue sharing content related to money and finance. Please subscribe to the channel. Tax Accountant Nabe solves your money problems.